Thank you very much for making time to join this morning's webinar session. My name is Sarah, and I'll be the moderator for the session. I'll be doing this with a gentleman who is not too new to the screens when it comes to webinars that we have held in the past. So I'll move on straight to my sole panelist for today to introduce himself, and then we will go straight into business matters for today.
Good morning. My name is Abraham. The last time I was on the webinar, I was with my son Isaac, and I think our mother Sarah was wondering what we were discussing on the webinar. So today she decided to moderate the webinar for us, and I'm hoping that we'll have good time. We will be able to engage and address all your concerns and your questions this morning. Thank you, Sarah.
Thank you very much. At least we are not sacrificing any Isaacs this morning, but we'll be learning a lot about how to make our financial futures better. So I know that in the past we've had a series of webinars. When the whole debt exchange program started, we came to you and discussed what you needed to know so as to calm your fears and what you needed to use your money for. And today we'll still be going into those things, but just to let you know, this webinar is being hosted by Petra, and we are committed to ensuring that we are a financial partner to you every step of your financial working journey. And this is coming to you via Teams this morning, but you can still catch us on Facebook Live or YouTube. There'll be a recording of this session should you have to fall away at any time, but we'd love for you to stay to the end because we have a lot of great things to share with you. And so we want this to be as interactive as possible. So kindly put in your questions in the live Q&A chat box session, and we will be addressing them at the Q&A session. So straight to business for this morning. Abraham, as I mentioned, we have been through phases as an organization and even as a country and as workers, both salaried and self-employed people. And we're wondering, is it really important to still save as a worker, given all the uncertainties that you see? So what will be your take on that, please?
Okay, Sarah, thank you for the question, and I'm very grateful for it. Yes, we are as the normal. We are not in normal time, like the say goes, and we are all skeptical about what we should do in this time. Should we save? Should we keep our money at home? I think during the last webinar, we depth in how we should manage our finances even in these times. Okay, but as a salary worker, as a self-employed person, currently most of us, which I mean being in this space for a while, have gathered some few thoughts, which if you can see my screen, I'm projecting the average lifestyle of a salary worker, which I have termed it as the rat race. So as a salary worker like myself, like you, we usually depend on our salary to cater for our emergency situations, and we've planned our lifestyle to suit our salaries that we take month on month. So the sad thing is most people have gone through this rat race. Take your salary, you spend it, you just take the money you disburse, you take the money you disburse until you reach retirement. And for you to get out of this rat race, you need to have a committed savings plan, no matter what. The other time, we made it clear that we shouldn't be moved by the market and you should know the road that you are traveling on. So no matter what, put something aside, save something, save a seed out of the money and you earn. So that at the end of the day, life will be very comfortable for you and you will enjoy your retirement or you'll enjoy your later life. Thank you, Sarah.
Very much, Abraham, for that. And I think we won't keep people waiting. We'll circle back to this topic of ensuring that as you're working, you still make savings, even though no matter what it is, things are expensive, inflation is out of the roof. We'll still circle back to that within the course of the webinar, but not to keep the people waiting, because really this is why they joined. Taking advantage of Petra's pension-backed loans. First of all, I just want to know what pension-backed loans are.
Okay, so then let me pick it from what a loan is. Then we'll narrow it down to what pension-backed loan is. Loan is very simple. Loan is a household name. People are much familiar when we talk about loan, and they know that you using collateralizing something to access cash. Okay, so we have the secured loan, we have unsecured loan, we have property loans, we have loans that you use, let's say your vehicle to secure cash. Okay, the principle is very simple. Give me money. If I'm not able to repay the amount I've received from you, based on the amount of what I've pledged as a collateral, you should trade it to take your money back. So that is a loan. Okay. So diving into pension-backed loan, what it means is you pledging your pension's contribution, the funds you've contributed into a pension scheme as a security for a loan. Okay, that's pension-backed loan. And in this instance, in our country, you can't use your SNIT contribution. So someone can say that, okay, I've contributed with SNIT for 10 years, for 15 years. Can I use my SNIT contribution as a collateral for a loan? No, the Pensions Act has not given guidelines on that. But the Pensions Act have given guidelines on how you can use your Tier 3 and then your individual pensions contribution, not the tier 2. Okay, I think we'll dive deep into it. But for your tier 3 contribution, the Pension Act have made it clear how you can use it as a collateral to secure a loan. So that one, using your tier 3 contribution to secure a loan makes it a pension-backed loan. Okay, thank you, Sarah.
Thank you very much for that. So pretty much the difference is there are different types of loans, and this particular one is secured by your pension. So I'm guessing it's especially because you cannot use SNIT, it means you cannot use your second tier as well, which is the 5% mandatory contribution. And so you can for now only use your tier 3, which is the voluntary tier 3 contribution that you can make, right?
Sure. So currently, as it stands, if we allow people to use their tier 2 to secure a loan, the sad thing is if they should default, what it means is that the finance house will fall on the tier 2 contribution that the individual have accrued towards his retirement. Okay, the Pensions Act also makes it clear that you can't use your tier 2 contribution to settle debt. So when you use tier 2 as a collateral, it defeats the purpose. What it means is that if the person even default, you can't access the tier 2 to pay off the loan that he have defaulted. But the tier 3 contribution is individual contribution, which allows you to pledge it as a collateral for a loan or a mortgage facility. Okay, so the law is very clear on it, and then we need to go by what the law is saying in relation to using your pension funds as a collateral for borrowing. Thank you.
Thank you very much, Abraham. So loans are typically given by financial institutions. You have your banks and non-bank financial institutions. Is Petra now a bank or non-financial bank institution to give out loans?
Petra is not a financial institution, and the loans that the pension-backed loan does not necessarily mean that the pension house is supposed to extend the facility to the customer. Okay, but what Petra can do is Petra can partner with financial institutions to extend these facilities to Petra customers, that is tier 3 and savings booster customers. Okay, so Petra Trust as an institution is not having the license to give out loans. But based on your tier 3 contribution, which is with Petra, which we are managing for you, based on it, you can access a loan facility with it. So Petra is not the one giving out the loan, but Petra is facilitating the process in giving out the loan. That is, if you need a pension-backed loan. Thank you.
Thank you very much. So clarity, Petra has partnered with other service providers who are in the business of giving out loans to give you these facilities at very great rates. So who qualifies? I mean, we know that there are Petra and non-Petra customers watching this webinar. Who typically qualifies for something like this?
So as stated earlier, for you to qualify, you need to have a tier 3 with Petra. So if your company is contributing into our tier 3 scheme, it qualifies you for the pension-backed loan. If you as an individual, you have a savings booster with Petra and you have some funds in it, based on what you have in your tier 3, your savings booster, it also qualifies you to secure and a pension-backed loan with us. So in this instance, if you're on this call and you don't have, your company is not contributing tier 3 for you, you as an individual, you can take advantage and contribute into the savings booster, which can serve as a personal tier 3 for you, okay? Not only because of the loan product, but to enhance your retirement and for you to have a savings plan that will work for you, okay? So if Sarah, you ask, the one who qualifies for pension back loan is those who have tier 3 with Petra and savings booster with Petra.
Now, the other qualifying criteria, maybe you should have been with Petra for a certain amount of time, or you should have had a certain balance in your account.
Oh no, so the number of years of you being with Petra does not really matter. You can join now and then access the facility, okay? What matters is how much you have in in your tier 3, either the savings booster or the traditional tier 3, that provident fund that your company have been contributing for you. So how much you have in it will determine how much you can access as a pension-backed loan facility. Thank you.
Thank you. So I'm sure people are very eager to hear, what are the rates? Because you have mentioned that you've partnered with a number of providers. What are the rates that you're looking at? And aside that, how do you even apply? How does the process look like?
Okay, so for the rate, as it stands now, the reference rate that banks borrow from government is a bit high now on the market, okay? It's close to 33%, that is 32.91 the last time I checked, okay? So what it means is that if you typically walk into any bank or a financial institution for a loan facility, you are likely to get it around not less than 35%. There is this organization we engage, and before we went in there, those who went to a facility from a financial institution were taking loans as high as 54%, which is very, very outrageous. I mean, if you are taking 10,000 cedis and at the end of the day, you are going to pay 15,000 cedis, 400, then why should I go for such a facility? Okay, but the rates for the pension back mod, because it is cashback. Cashback in the sense that you have cash with Petra. You have a tier 3 contribution with Petra. And based on the tier 3 contribution that you have with Petra, you want us to advance a loan to you. So it's a cashback loan. So it is more or less a risk-free loan that is available for you to access. Okay. And because of that, we've been able to negotiate on behalf of our customers to reduce the rate, to a very competitive rate on the market, which is 2.5% monthly, translated into 30% per annum, which is even lower than the reference rate on the market. Okay, so that is one provider, and we have another provider who is also giving out the facility at per annum. You're paying 36%, but have got some unique features which will help individuals who really want to access a loan with that provider. Okay, so what we are doing is we are partnering a number of organized financial institutions to come up with the best rates, the best option, the speed you will need, the tenure of payment of your loan, the ability to repay the loan earlier, so that life will be comfortable for our scheme members in the near future. Thank you, Sarah.
Thank you very much. So you did mention that when it comes to the reference rate, which is the rate at which banks can add a markup to charge you for debt securities that you take like loans. And today it's around 32.91, which is almost 33. And so you could have as much as that +5 or +4, but at Petra, you're doing 30% to 36%. And also, this is with a different set of providers, and that is dependent on the speed and then the repayment process, the mode and all that. So how does the repayment process look like? If I'm a regular Petra contributor, I earn a salary, how does it look like? Is there any ranges I can see that shows us if I should take a loan of this amount, how much do I have to repay back and what's the tenor?
So the loan facility have been put in place to help you resolve short to medium term emergencies that might come up. Okay. We have the long-term loans which one can access for a mortgage, but since this conversation is there towards the short to medium term loans, I think we'll focus more on it. So the tenor for the loans ranges from 2 months, 3 months to 2 years. Okay, 2 years maximum. And if you need more than 2 years, we can have a conversation around it to see how best we can help you. Okay, and then the repayment option from a conversation we had with one customer, he was looking at if we can use the interest she is accruing on her tier 3 to pay off the loan. And we advise her that when we do that, what it means is that your tier 3 will not be growing. Your tier 3 will stack, and then the interest of it will rather be used to pay off your loan, which from where we sit, it wasn't the best of option because the interest your tier 3 is generating or the interest your savings booster is generating is also generating interest for you. So if we should tap into it to repay off your loan, for the short to medium term, I think, oh, it's a great idea, but in the long run, it will not help you as a customer. So in the application process, what we do is that you fill a direct debit form that after the loan have been advanced to you, month on month, deduction will be made from your bank account to settle the loan from the provider. The only time the provider will fall on us is when there is a default in repayment. That is where the provider will tell Petra that, oh, AB came for a loan and for 2 months, if not heard from him, so per the arrangement, then we'll fall on his tier 3 to pay off the loan. Yes, so that's it.
Thank you very much. So how simple is the application process in terms of documentation and everything? How can people apply after this session?
Oh, it's very, very simple. Even I think on this call, our colleagues are on standby to help those who be interested in applying. So I think a link will be shared and do it to populate it. That is if you need a loan. And before I even go to how you apply, let me sound this caution. Please don't take a loan because it's available and you qualify. You should take a loan and know what you're using the loan for. Okay, someone will say that, oh, it is available, I qualify, I can take it. Remember, when you take the loan, you pay back. And if you don't really use the loan for something which is pressing or something that you need a loan for, what it means is that it will not help your financial planning. that we are advocating for. It will not really help your financial planning. So in as much as the loan is available, we will only encourage you to use it for emergency situations, like you needed to pay a school fees, there are medical bills you need to settle, you need it for a rent. Okay, these are things, emergency situations that you will need loans for. So if you want to apply, you can visit loans at Petra online. Okay, loans at Petra online, and then the application process will start from there. There are forms available online that you can complete, or you can visit the Petra office, talk to any Petra rep, and then we'll give you application form for you to apply. If you get a completed application form, it takes maximum 48 hours for the funds to be disbursed to your bank account. Thank you.
Thank you very much. So we're going to swoop in and take a few questions because that would help the conversation better. And then we'll come back and just talk about a very important point you made about breaking into your investments in the sense of emergencies. And so we'd like to know who you are. So try and, when you're asking the questions, let us know your name and where you're reaching us from so we can know who we're talking to. But I have a few anonymous ones. So this question says, thanks a lot for this webinar. You're welcome. My question is, do I still need approval from my company before assessing this loan facility?
Yes, please. I know it will not go down well with some people, but there are some organizations that extend facilities to their employees, and the employees pledging their Tier 3 contribution as a collateral. Okay, and we've had such instances where people will pledge their Tier 3 as a collateral in their organization, then they'll resign, then they'll come and redeem their Tier 3 from us without us not knowing. So for the loan facility, you complete the application process. You just give it to your HR or head of finance for him to endorse it. Then you forward it to us for processing. I don't think if you don't have any facility in your company, it will be difficult for you to do this. I know some people will not like their employers to know that they are going for a loan facility, but for some of these checks that we have experienced over the years have made us put this measure in place so that at least your employer should endorse. And again, there are other people, other organizations that the employer contributes for its employees. Okay, in that instance, we have to alert the employer that my contribution, I'm pledging it as a collateral for a loan with Petra Trust. So we just need its approval for us to continue the process. Thank you very much.
Thank you very, very much. And so this person also says, I tried a savings booster, but it did not work. I mean, the monthly deductions from my bank. And I'm sure this, just get in touch with us again. Privately, we would help you with it. It has to do with a few things. So we just need to get more information to understand what the challenge was and why the deductions didn't go through, the direct debit didn't go through from your bank, and resolve it quickly. Matilda Akrofiedu says that, please, is Petra in any relationship with Leshego to secure loans? I'm sure she's asking with respect to the providers.
Yes, please. So Leshego is one of the providers we've engaged in extending these facilities to our customers. So if you have been with Leshego for a while and you know their services that they render, they come in with some good rates, and then you can take advantage of it. You pledge your Tier 3 as a collateral, then we then engage Leshego to extend the facility to you. Thank you.
Thank you very much. And Dr. Abdul Malik says, sorry, you provided rather a partial view to what a loan is, mind you. They are collateral-free loans. So need to bring out that clearly. I'm sure he's referring to our examples or explanation on what loans are, especially when it comes to pension-backed loans. So maybe we can talk about the different providers and the kind of collateral limits they give.
Okay, so for collateral-free loans, usually they term it as good faith loans or the signature loans. So those ones, like the student loan we have been assessing when we were in school, you don't really have to provide any collateral to assess that loan. So those are collateral-free loans. They just base it on your good faith that, oh, he will repay the loan, base it on your credit card or your credit history, that looking at his credit history, he'll be able to service the loan if we extend the facility to him or her. Okay, so that is one aspect of a loan. Okay, it's a collateral free. You don't need to provide any collateral. You just go to the bank or you go to the financial institution. Like the example I cited, which a number of people on this call can relate to, the student's loan. Okay, back then you need to have a guarantor who is a SNIT contributor, but now it has been waived off based on the student's good faith. They extend the loan to him that after school he will be able to pay such a loan. And let me touch on this also. There are some organizations who also give these unsecured loans to their employees. If you are hard pressed for cash, if you are hard pressed for a cash, breaking into your investment will not be the ideal thing to do. You have to look out for some of these soft loans available that will ordinarily not charge any interest. Okay, you go to your employer, some friends and family are willing to extend loans to you without paying any interest, or some old school reunion group, or even your church group, or a credit union you have in your church is willing to extend these loans for you. These are good loans. These are unsecured loans. These are loans based on the good faith that if I give you the loan, you pay back. Okay. And please, when we take such loans, let's pay back, because others might also have need for it. And if we don't pay back, it will be very difficult for them to support others. But what I'm driving at is loan is not all that bad, but depending on the person who is taking the facility and then the type of loan. Even with the secured loans, you should also look out for a feature whereby it allows you to pay off the loan. Okay, because the number of years you take the loan and you are doing the repayment, the longer the period, the more interest you pay on the loan that you've secured. But if the loan has a feature whereby you can pay it off over a period and you'll be good to go, it's a good loan. It's a good loan facility. I will encourage you to go in for. So as Doc said, we have unsecured loan and we have the secured loan. So the unsecured loan basically base it on the fact that I'm trusting that at the end of the period you pay back my money. Thank you.
Thank you very much for that. And I think Doc still comes back to say policy rate is 28%. That's true. There are two different things. A policy rate is totally different from what a reference rate, which is what borrowings are done to commercial from commercial institutions to the regular public like us. So these are two separate things. The policy rate is very different, which is 28%, yes, but that is not the rate at which lending is done. Reference rate was agreed on a few years ago when it started, and reference rate is always something plus a markup. And the reference rate is what is the 32.91%. So, Doc, there are two different things when it comes to reference rate and policy rates. One has to do separately with how Bank of Ghana loans out, and one has to do with how commercial institutions simply just loan out to people. So there are two different things. And when it comes to loans and any type of debt instrument, mortgages and things, banks use the reference rates, and that is currently 32.91%. All right, so we go on to the questions again. There's someone else who is still struggling to understand why they need approval from their employer if they need a loan less than their total balance. Why do they still need approval from their HR to get the loan? So I think we should just touch on that once and for all for people to understand.
Yeah.
And maybe we can throw in debt service ratio as well, because there's a question on that, why we need all that information.
Okay. There is a saying that if you are not a thief, you are not worried if they are building a police station next to your building. No, that is just a saying, not to refer to our audience. So if they're announcing in town that there is headache, how does it affect the crab? He's not even having a head to think of headache. Okay, this is just an additional check we need to put in place in order to protect the employer. We are not in the organization with you. Okay, we are not an employee of your company, and for that reason, we need to some extent protect the interest of your employer as well. Okay, so yes, conversation is still ongoing to find best ways we can deal directly with our customers without not going through the employer. But as it stands now, we need the approval of your employer to be able to advance this facility to you. Thank you.
All right, thank you very much, AB. And Samuel is asking if you are redundant, please, if you are redundant, will Petra give you your tier 3 contribution without deduction? I'm suspecting the deduction is the tax component if you're doing a pre-tax contribution. So will Petra give you your tier 3 contribution without any deductions?
If you are redundant and you've not been working for a while, if you come straight to Petra to redeem your funds, the withholding tax will apply. Okay, but if you go through the Labor Commission, you go to the Labor Commission, indicate that I've not been working for a while and I want to assess my tier 3 contribution with Petra, and they give you a letter indicating that you are unemployed and you want to assess your tier 3 contribution, the withholding tax will not apply. Okay, it wouldn't apply. But when you walk straight to our office that I've not been working for 5 years, I need my money, obviously the withholding tax will apply. That is if you have not been in the scheme for 10 years. Okay, but if you've been in the scheme for 10 years or more, the withholding tax does not apply. Thank you.
Thank you very much. Faustina Mante Pimpong says, I want to know who qualifies for the loan you're talking about. And Lute also says, could you please mention the various financial institutions Petra has partnered with? So go over the qualification again and then the institutions that we've partnered with on this.
Okay, thank you for the question. So for the qualification, as I mentioned, you need to be a tier 3 contributor with Petra Trust. You need to have either your company is contributing into our tier 3 scheme, or as individual, you have a savings booster package with us. Remember, the savings booster invests in the tier 3 pool of funds. So we can classify the savings booster also as a tier 3 contribution. So with this, it doesn't really matter how much you have in your tier 3 or how long. No, it doesn't matter how long you've been in the scheme, but what matters is how much you have in the tier 3 scheme. Okay, so to qualify you need to be a Petra customer having a tier 3 contribution with Petra Trust, then it qualifies you. And then the other question has to do with
the financial institutions we've partnered with.
Oh, okay, sure. So we've partnered with Leshego, and then we have CDSPay also on board. We have few others we are yet to onboard. Some few banks we've engaged, Commercial, Access Bank, still in talk with Fidelity. So these financial institutions have also expressed interest to join the banks who want to extend these facilities to our customers. But as it stands now today, we have these 2 banks that are willing to extend this facility. That is Leshego and CDSP. Thank you.
Thank you very much. So what's the maximum, Ebenezer Young saying, just acknowledge you, what's the maximum years someone can be a Petra contributor?
If I heard the question right, what's the maximum someone can
be a Petra contributor? I'm just going to preempt and ask that. Probably he's asking this because how long can you contribute for to be able to assess the facility? If that's not it, you can just come back and Ebenezer just clarify. But just to preempt, what's the maximum years someone can be a Petra contributor and maybe to qualify for the facility?
Okay, so the number of years does not really matter. What matters, as I've mentioned, is how much you have in your tier 3. But let me put this across. There are some organizations that have vesting rules around their part of contribution. Okay, so maybe Petra Trust, AB working with Petra, Petra is contributing for me, and Petra is saying that AB, before you can assess the money I'm contributing for you, you have to be an employee of Petra Trust for a minimum of, let's say, 3 years. So I can be in Petra, I can have Petra contribution coming in for me, but to a larger extent, that money does not belong to me unless I've worked with Petra for 3 years. Instances whereby I want to use Petra as part of the contribution to secure a mortgage, a loan facility, the employer have to be in the loan. So because of some of these checks, that's the reason why the employer have to sign off if I'm assessing a facility. One may ask, what if I'm using only my part of the contribution to assess the loan? In the same regard, we don't know the arrangement you have in your organization. Maybe your organization allows you to use your part of contribution to secure a loan, or maybe you've secured loans in some other organizations using your tier 3 as a collateral, which we might not be in the loan. It is your company that will be in the loan. So in that instance, in that regard, it's only fair that we let your employer be in the known by endorsing it, and then you forward the document to us. Thank you.
Thank you very much. Moving on, Ebenezer still is asking, he's 59 and will be turning 60 in January next year. And he has a savings booster with Petra. Does he still qualify for the product? And then just to add on to that, so do you qualify if you just have a few years to retirement, specifically, like, let's say a few months to retirement?
This is a tight question. 3 months to retirement. I will encourage, although you qualify, but it's not something I will encourage you to assess the facility. You can come around for us to have a conversation. I think there are other ways we could look at it. And what Eben is also asking, 59 years, and would like to assess the facility. At least Eben can take it for 6 months and then pay off, and whilst he's still in employment. But if you have 3 months, yeah, in the month of March, April, May, by June, you'll be going on retirement and taking a facility. And from where I sit, I would like to put some unusual stress on you, which I will not encourage. But if you are really interested, our doors are open. You can come to Petra office. When you come, ask of AB, let's sit down and have a conversation and see how best we can help the situation. Maybe what you're even going to do, you don't really need to take a loan for it. Because remember, the loan comes with an interest that you'll be paying, although it is better than the interest rate on the market, but yes, still it is an interest you'll be paying for the facility. Okay, so if there are other ways we can look at it, I will encourage that you come around for us to have a conversation and see how best we can assist in that regard. Thank you.
Great. So Ebenezer, we look forward to seeing your interaction with you digitally very soon. So someone is asking, are the repayments taken from my salary or from my monthly tier 3 contribution?
So the repayments will not be taken from your monthly tier 3 contribution. Okay. If you are taking it from your monthly contribution, what it will then means is that your contribution will not grow and will not help you. Remember, your contribution that comes in generates interest for you. Your month-to-month repayment, your month-to-month tier 3 contribution generates interest for you. Okay, so if you are saying that your contribution that is coming in, we are going to redeem it to pay off your loan, it will not be in your interest. Okay, but what will happen is that it will be taken from your bank account. So what it means is that month to month, your account should be liquid for the deduction to go through. So it will not even write to your employer that you have taken a facility and that they should deduct it from your salary and pay it to Petra. No, it will be deducted from your bank account, and then from it you'll be servicing your mortgage and your loan month on month. Thank you.
Thank you very much. We're having a couple of questions around taking the facility to build a house, or if we have a mortgage, sort of. There are a number of them. So just to let you know, we've seen those ones. There's a different package for people who want to build houses or who want to get buy land or complete a house you've already started. And we're going to have a different webinar to discuss that. But today we're just looking at those that have emergency needs and don't want to break into the investments and still want to be able to assess it and pay over comfortably over a certain period of time. So we'll have a separate webinar for you who are asking to take this product. And there's another question around the ratio of the loan amount to the PF contribution. Well, the loan amount is a bit limited, but the next one we'll talk about in the next webinar is where you can take a sizable amount more than your tier 3 to access for mortgage purposes. So kindly bear with us, we'll bring you a different webinar on that particular one. So moving on with the questions. Yes, I think most of them are mortgage. Okay, moving on with the questions. We have also shared the link for the application of the loans and any other information that you may have missed if you joined within the middle or the tail end of this webinar. So you can go on and access them. Okay, so next question, moving on. All right, so if someone has 3,000 cedis contribution in his tier 3, how much loan can be given? Very specific.
Yes, I'm not beating about the bush. I have 3K. How much can you give me? Oh God. So we have per the arrangement we have, you qualify for 85% of what you have in your tier 3. Okay. And then another provider is also willing to give you more than what you have in your tier 3. That is up to 150%. Let's say 50% more of what you have in your tier 3. So if you are going by that, what it means is that you can access up to 4,500 cedis as a loan. Okay, if you have 3,000 cedis with us, yeah, so you can access up to 4,500 cedis as a collateral, as a loan, using your 3,000 as a collateral. Thank you.
So we've also shared something in the chats just to take your information if you are interested. As AB mentioned, these loans are short-term, softer loans that should help you meet a certain loan. It's an easy loan. So instead of breaking, it's very easy. You can just assess that. So we put in a link. If you're interested, kindly complete the form for us and also kindly complete the feedback form so we can know how to improve on these sessions and tailor them to meet your specific needs. So there's another question that's from Paul K. I will be 55 next year and would want to retire voluntarily. Good for you. What are the benefits open to me? I have Petra, but not tier 3.
Oh, you are 55 and you want to retire voluntarily. And you don't have a tier 3 with us. So you get only your tier 2 contribution. But just by the way, but if you really want to retire voluntarily, yes, our doors are open. We have options available. We can have conversation to see how you plan your finances, even on retirement, your lump sum that you'll be receiving, how that's your tier 2 contribution lump sum that you'll be receiving. How will you manage it to help you throughout your retirement life? What options can you place your funds in to generate returns month on month that you can, redeem those ones to help cushion your life whilst on retirement? Okay, so if you really want to retire and you don't have a tier 3 with us, sorry, you can't access the loan facility, but you can come around for financial advice, and then we'll see how best will help you through your decision. For all you know, you've started a business and you like to focus more on the business, which I'll give you thumbs up for it if that is the case. But yes, you need some advice on how to manage your finances, even if you have started your own business. Thank you.
Great. So we're here to offer you financial advice, and just walking anytime would help you. Leo says, is the loan term fixed or variable? Is the loan interest term fixed or variable?
Okay, so this time around, we'll be going with a fixed rate throughout your tenure of payment. Okay, it's a fixed rate. Some providers have the variable, that is if you want to go in details, that one will come with the reducing balance conversation. Okay, and then we have the fixed one, that is the 2.5 running through. If you want to do early settlement, I think you pay 2 months on the interest for the 2 months, then you can do the early settlement. But as it stands now, we'll be going with the fixed rate conversation for those who are interested in the loan. Thank you.
Thank you very much. Just reminding us that we have in the chat session a link for you to put down your details so we can contact you for the ezLOAN if you're interested, and also to leave your feedback on how we can improve this webinar when it comes to the next series. And next question, lengthy one from Anonymous. I work with a bank which is now defunct, who paid my tier 2 to Petra. Now my current employer is paying same to another trustee and my tier 3 to Petra. Can I transfer my tier 2, which was paid by the defunct employer, to my tier 3, which is active now? It looks like a combination sort of question.
Sure. So you can mix your tier 2 contribution with your tier 3 contribution. Okay, your tier 2 remains tier 2, your tier 3 remains tier 3. What you can do is your tier 2 that used to be paid by your previous employer, there's an option for you to transfer it to your new provider. Okay, but if you're enjoying the services we are offering at Petra, you can still keep your tier 2 with us whilst your company pays to the other provider. When you hit your retirement age, you assess what you have with Petra, and then you assess what you have with your new provider. Okay, so the law allows individuals to port their funds from one corporate trustee to the other, which I will encourage, because instance whereby you reach your retirement age and you can't really remember where your contributors, your corporate trustees are, will be a worry. So if you are with a different, your company now is paying to a different trustee, your tier 2 to another trustee, I will encourage, you can engage us, we'll give you the form, or you can engage your other, you transfer your funds there. But if you're enjoying the services we are providing here, I'll encourage you to stay, enjoy our services, and then let your tier 3 run. But we can't consolidate your tier 2 and your tier 3. They are two different schemes. Thank you.
Thank you very much. Victor Kujo Bamford says he joined late. And how much is the loan interest again?
So 2.5 monthly translated to 30% per annum to 34%. So it ranges depending on the provider you are willing to go with, and then the duration you are willing to take the facility. Remember, we mentioned you can assess it. One provider is giving it up to a year, the other is willing to do more than a year. And if you want to go 5 years or something, we can have a conversation around it. Thank you.
Thank you very much. There's another question on vesting. Now, please, is the 10 years tax-free access to tier 3 aggregated from when you join the Petra scheme, or it is restricted to an employer or to each employer? I'm taking it again. Is a 10 years tax-free access to the tier 3 aggregated from when you joined the Petra scheme, or it is restricted to each employer that you have?
Okay, so the 10 years is when you joined a tier 3 scheme, not when you joined a company. It is when you joined a tier 3 scheme. So AB used to work with a company that was paying tier 3 for me. They were paying the tier 3 to 5 years. I resigned. I stayed in the house 2 years doing my own business. Later on, joined Petra Trust, and Petra too is contributing for me. What it means is that I've been in a tier 3 scheme for 7 years already before Petra started contributing for me. So joining Petra and Petra contributing, Petra will have to contribute only for 3 years for me, for the 10 years to vest. Okay, so if Petra contributes 3 years, all that I need to prove is that a certificate that shows that I've been in the scheme for 7 years already with another provider or with Petra, then I can assess my tier 3 contribution without not paying any withholding tax back to government. I believe the response helps.
Perfectly does. Another anonymous person joining us says, how do I know my Petra balance and how do I know my company is paying my tier 2 or tier 3 instead to Petra? I'm sure you can reach out to us again and we'd also share the details with you. You can either reach us by phone or via our customer service team, either by sending us an email to customerservice@petraonline.com or even going to our online portal and using the chat feature there to chat with an executive or representative. We would share our Petra WhatsApp numbers too if you want to make it a little more social. So you can reach us through various media and even through the short code. Yes, so we have a short code as well that you can reach us on. So there are various media that you can contact us through. So we'll share that with you so you can ensure that your issues are resolved. Now, going on again, just to remind us, please share your feedback with us. It's very important so we can know how to improve better in the next sessions. And then through the link that has already been shared, and then also to leave your name or your phone number in the other second link that was shared so that we can contact you directly and have a conversation with you about the product. So we're almost out of the questions that we have for the webinar, and we just circle back to a very important point Abraham made in the beginning about still saving and being able to use your tier 3 funds without breaking into it. So I'd like us to talk about it again. We started with the rat race where some of us find ourselves in from hand to mouth kind of salary sort of life that we're living. How do we as individuals break out of this mold and how do we take advantage of all these things that have been mentioned here at Petra today? So we could summarize that for us.
The only way you can break away from this rat race thing that all of us, I'm part because I'm a salary worker, find ourselves in is for you to save. Saving it in itself is not that easy. Parting away or deferring your consumption is not easy. So savings is very simple. Defer your consumption for later date, okay? And savings also is not enough. If you save, deferring your consumption, I have 10,000 cedis. I could use it for anything, but I decided, oh, let me save this 10,000 for tomorrow. I'm deferring the consumption of the 10,000 cedis. The danger of it is that if I defer it and I keep it in my room, inflation is one thing that will consume my money for me. So then the best option is that after saving, I have to invest the money. Okay, investing the money, you need to understand which institution you are placing your funds with, that you are trusting them to manage your money for you. Okay, so savings is good. Grow from savings to invest, and when you are investing, invest consistently and regularly. Don't invest with the mindset that if I have an emergency, the first thing I'll fall on will be my savings. In that regard, it will not really serve the purpose of saving. Kindly permit me, I would like to share a screen, then we can put the conversation into a perspective. So I don't know if my screen is visible for our audience to see. Okay, so there's someone who has 10,000 he could have spent, but he decided to place the 10,000 in an investment vehicle that returns 21% per annum. Okay, at the end of 5 years, without not adding anything to his contribution, the funds have grown to 25,000 cedis. You could see the year-on-year growth of his funds. He could have consumed it at the initial stage, but from year on year, the funds have grown to 25,000 cedis. The question I usually ask people is, how long have you been working in your organization? How much can you pinpoint that this is what I have gathered for the 5 years of being in Petra Trust, for 3 years of being in Petra Trust? Okay. Moving on from this, I have a little challenge. Okay. There's someone who also have a plan that in 15 years time, if I should hit my retirement, I should go home with a little over 1 million Ghana cedis. Such a person just needs to contribute 900 cedis month on month into an investment vehicle that returns at least 20% per annum. Look at such a person. In the 7th year, the interest he accrues on his contribution is more than what he have contributed. So this person would have contributed 75,600 cedis for 7 years. But look at the interest, 87,971, translated into 163,571 cedis. Now the question again is, how long have you worked in your organization? Can you boldly say that you have 163,000 cedis in your investment? Assuming the person who was investing in the 3rd year was having an emergency and wanted to fall on his investment to settle the emergency, that is 30,000 cedis. This 30,000 that he will redeem, he will lose out on the interest component for the next year, which will reduce his dream of attaining 1 million in the 15 years that he is looking at retiring. Okay, so that's what we're advocating, that if you have an emergency, falling on your savings or on your investment will not be the first option you should look out for. Allow your investment to run, allow the contribution to go on, allow the funds to grow, allow the contribution to come in and allow the funds to grow. It will shock you in the next few years, in the next 10 years, in the next 15 years that you hope to retire, the interest that the little contributions you have been doing would have enhanced your life. Taking a loan of 10,000 for 24 months will mean you'll be paying 600, close to 667 a month on month, with the interest embedded in it. This you can afford and allow your investment to grow. You can take the 30,000, which ordinarily you'd have broken into your investment to assess, and pay 2,000 month on month for 24 months, which you can afford, and allow your investment to grow. See, the reason for all this conversation is very simple. Allow your investment to grow. Allow your investment to relax. If you're hard pressed for cash, don't fall on your investment. Don't disinvest your tier 3 and pay the 15% withholding tax back to government. Allow it to rest. Allow it to grow for you. It's my dream that we'll all hit 1 million when we work in an organization for 15 years, whereby we can part away with 900 cedis. Then in 15 years, having 1 million will be 1 million. Forget of inflation. You might think 15 years is that long, but we recently celebrated 10 years at Amel's passed on and still counting. And next year, Akufo-Addo being our president will be 8 years in office already and will be voting for another president. Okay. The best time for you to have saved was yesterday. The last time is for you to take the decision today to discipline your savings, discipline your spending life, and then put some money aside. Based on the money you've put aside, you can then access a loan facility based on what you have with Petra. Thank you, Sarah.
Thank you very much, Abraham, for that. So just reminding you that we have 2 links in the chat session. That is one for feedback and one for people who are interested in being contacted after this presentation to know what their options are when it comes to loan products. Our YouTube family is not left out. So there are some 2 questions we have from our YouTube space, and that is from Bernard Henyo. I currently have a facility at SCB, I'm guessing a Standard Chartered Bank, The interest I'm paying each month. How can my Petra contributions help me defray this loan? So Bernard Henyo is lamenting about his current debts. I'm guessing that is also a very variable loan. How can his Petra contributions help him defray that loan?
I'll encourage Bernard that he should come around for us to have a conversation. Then we could see how best the partners we have on board will assist. As it stands now, and we've not engaged in the conversation with them as to how they can pay off a loan. Okay, that is if it's a personal loan. But I think if we meet and we have a conversation, and we can get somewhere with this conversation. So Bernard, our doors are open. You can pass by our offices at Airport West. Come, let's have a conversation. That is, if you have a tier 3 contribution with Petra, okay, come, let's have a conversation and see how best we can help you. Thank you.
All right, thank you very much. And one last one, there are still concerns, even coming from YouTube, about why I need to involve my employer in if I am taking a loan. People are concerned. So, and for those who have employer-employee contributions when it comes to tier 3, could you reiterate one last time why we still need employer approval?
It's not a challenge we can't do without. Okay, there is always a way we could handle this, but we need to protect the employer's interest as well. Okay, we wish we could go directly to deal with the customer and then the employer will not be in the loan. We are hoping that very soon we'll get there. We are hoping that very soon we'll get there. But as I mentioned, if you have a tier 3 and your employer is contributing part for you, it's only fair if we let your employer be in the known that you are pledging your tier 3 as a collateral. Okay, and then based on it, the facility is extended to you. And looking also at the vesting condition that some employers state on the forms, and it's also fair that we let them be in the known that AB is using his tier 3 as a collateral for a loan. Okay, so we shouldn't be that bothered much. I've seen it, it's like it is coming up so strong. We are taking a look at it to see how best we can go around it. We are engaging further to see how best we can make it possible without the employer being involved. But as it stands now, per the product we have and the arrangement and then the agreement we have with the providers, the employer have to be in the known. Thank you.
I trust that you can bear with us. It's not to victimize you or make the process a lot slower, but it is just to ensure that we have ticked all the boxes that we need to tick. So thank you very much. Just to clarify on Bernard's, it's personal pension. So that's savings booster. So yes, you can do that. And we have had a great time today. We cannot wait to have you again at our next webinar, where we're going to be talking about mortgages. You wouldn't want to miss that. So if you're building in this kind of economy where cement bags are going from 80 to 75 and 75 and up and above, and the dollar is also showing us a side of itself. You want to own your own property, please just join the next webinar. We'll be having conversations around that. Any final words for us, AB, before we round up this session?
Okay, so those of us on the call who want to use their tier savings booster contribution to secure the loan product, that one we can do without your employer. That is if you have savings booster with Petra, personal contribution you are doing, because we believe that one is open to the general public, and then you can contribute into the savings booster without not even being in employment. Okay, so if you have your savings booster and you want to pledge your savings booster contribution as a collateral for the ezLOAN product, we can do that without your employer. But if it is your tier 3, then kindly bear with us and then let your employer be in the known. So for my closing remarks, please save for tomorrow. Money speaks only one language. If you save me today, I will save you tomorrow. Don't look at what is happening in the economy and say that I'm afraid to save. As we mentioned in the last webinar, this is the best time you can take advantage of unitized scheme and get more unit. If you are looking for a place to save for you to be secure, Petra, we are available. We have both the mutual funds and we have the pension investment product available. You can take advantage of. Come to our office. Come, let's have a conversation. Have a savings plan. Have a savings plan. The economy we find ourselves in, if you are not saving and you are doing my rat race thing, which I am breaking out of it today, and then things will be tough for you in the near future. Save and then let your savings save you tomorrow. Thank you very much.
Thank you very, very much, Abraham. We've shared Abraham's contacts in the chat, so if you want to speak to him after here, you can do that. Additionally, just go back and please try and fill the feedback form for us in the chats, as well as if you want to have any further information on the loans after this, please complete the loans request form as well, so we can directly contact you and have that conversation. It's been great having you for the last 1 hour. And just to also summarize, we need to save. As he said, save. Money speaks only one language. If you save me, I will save you. Recapping, Petra is dedicated to helping you meet your short-term urgent financial needs. And so we have developed a number of products, and one of them is the loans product that we classically talked about today. It has rates from 30 to 36%, depending on the provider, average tenure of 2 years. And so these are fixed rates for some of the providers. You can take this product and then pay at your convenience without having to break into your tier 3. And when it comes to the rates that you're seeing today, just to clarify, also because of what Dr. Malik put up, there's a policy rate, which is at what the Bank of Ghana lends to the commercial banks. And there's a reference rate. That is the rates we get as customers or consumers. And so reference rate is now 32.91%. And if you should go to any bank at all for any facility, it will be the reference rate plus something. But here we're doing rates at 30%, which is lower. Because you're a Petra customer, we have thought about you and put in these structures to make sure that you don't go and take a loan for 40% or 39% and suffer to pay. So please take advantage of this. Still fill the forms. Let us contact you afterwards. My name is Sarah. I was the moderator for today, and I was helped by Abraham Arthur, who's the category manager for loans and mortgages here at Petra. We cannot wait to have you at our next webinar, and that will be very soon. So have a good day and a good business week, and we will see you very soon again. Goodbye.